Let's take a look at what we're seeing stateside with rates talk, of course, and how that's affecting currencies. Nick Twidale is joining us from FP Markets. Nick, good to see you.
Thank you. Thanks for having me.
Yeah, a lot of Fed speak at the moment, isn't there? And largely contradictory. What do you make of that?
It makes it very difficult, especially for FX traders, to get a real grip on things. But, you know, we've seen a massive decline in the dollar over the last 5 or 6 weeks. I think we're down nearly sort of 4%. I'm wondering how much is really priced in, because the market's really pricing in sort of earlier cuts next year. We've got a bit of a split with where, as far as the Fed goes, and the market's kind of looking on the sort of the glass half full side of things on the majority of the time, especially from US equity point of view. Whereas if there's talk of rate cuts, bang, we'll have them and the dollar gets smashed. But anyone that comes out and says, well, hold on a minute, we've got to get to 2%, then it's largely been ignored. So I think from that perspective, we're going to see a lot more volatility coming into the Christmas period ahead. So I think it could be quite interesting in currencies.
Yeah, because we have seen the US dollar come off quite considerably just recently, as you say, on that talk of a rate cut coming as soon as the first quarter of next year.
Yes, and I think that's probably getting a bit too ahead of itself. And a lot of people are saying, is the market way ahead of itself?
Yeah.
Especially the FX, which does tend to sort of jump on these trends as well. And we're hitting some key levels in certain currencies that if we do see breaks, then it could see fresh levels, and we could see a December where the dollar really does take a bit of a hiding. But conversely, there could be a little bit of a reality coming into the world, and it drops back into the ranges that we're more familiar with.
Well, of course, we've seen that weakness in the US dollar. That's being supportive of the Aussie.
Yep.
Also, I guess you're seeing that potential widening of that, a closing of that interest rate differential, I guess, if we do happen to get another rate hike locally. What do you see influencing the Aussie from here on?
I think probably the way the dollar's going, you don't take the dollar out of the equation. I think, you know, that would be a perfect trade, and I think I brought up this chart because we're sitting on that longer term trend line. If it breaks through there, as you can see from there, it opens up the way back up to the 70s. That could be the perfect storm for Aussie bulls if we continue to see this dollar selling, and we do get that one more hike, which I think a lot of people are kind of dreading. Yesterday's CPI number helps the case that we might not get it, but we're still a long way away from. We've got to remember the RBA's got that 2% target as well. So I think there's a case for Aussie. I would argue probably on the crosses that we're going to see a little bit more strength, especially if we see Chinese numbers start to come back, and we've got some Chinese numbers coming out later today. So I think the Aussies, clearly from a technical perspective, are an interesting point, and I think from a fundamental point of view as well, we could see those interest rate differentials really kicking in the first quarter of 2024 if what we're hearing about the US dollar is correct.
What are you watching for with the yen at the moment, Nick? Of course, that's been hammered this year. It took out that 150 level against the US dollar last month, with prospects perhaps that you're going to get that intervention of the BOJ dissipated.
Yeah.
What are we likely to see? Because, I mean, that's not ruled out, of course. They're going to make a move.
I don't think so. I mean, I think they've kind of, the BOJ's kind of been let off the hook by Fed expectations from that dollar yen point of view. If you look at yen on the crosses, it's really taken a hammering. Aussie yen's one of the big ones. We're not multi-year highs, and I didn't throw a chart in for those, so we can't show that. I think we're going to see. I think that's one of my more certainties from a central bank point of view going into 2024, that we will start to see that change of direction from the BOJ. So I do think there is a case that we do see strengthening across from the yen across the first 2 quarters of 2024, but how quickly we see it, a lot's going to depend on, especially for the dollar yen, on what we're seeing from other central banks. So I think what I'm really looking for coming into 2024 is those interest rate differentials starting to kick in and getting some decent trends in the currencies. So at the moment, I think the BOJ has been let off the hook. If we see a turn in the short term, then we might see them coming back into the market. We're not too far off those highs. I know it's like 4 or 5 big figures, but anywhere back above 150, I think the red phone starts ringing in the BOJ, right. and they're on the alert.
Yeah. Okay. Well, we'll see what transpires next year then. Nick, let's take a look at the Kiwi dollar now. Of course, this off the back of that decision this week by the RBNZ to leave rates on hold. That was expected. However, the commentary accompanying that move was more hawkish than expected.
I found it sort of incredibly more hawkish than I was expected. the the RBNZ do love to throw the cat amongst the pigeons, don't they? They like to sort of be an outlier, and they were yesterday. So I've thrown the Aussie Kiwi chart because the Kiwi had a real sharp move to the top side, and then the dollar aspect came in, and you saw a lot of volatility and a lot of move. It was a whippy move in the Kiwi, but generally most of I suppose the more experienced older heads in the market, they'll look for Kiwi crosses when we're seeing these sort of moves coming through, and Aussie Kiwi is a classic. And yesterday was the perfect storm. And I just threw that in because you got the lower CPI print than expected from Australia, and then we got this hawkish hold from the RBNZ. But yeah, the rhetoric around it was much more hawkish than I expected. And even if they wanted to lean that way, it seemed to be, we've got more work to do here, and they're at pretty high rates. So I don't think it's particularly great news for Kiwi householders at the moment.